Good morning. You're watching The Market right here in ET now with me, Aisha Faridi, Nikunj Dalmia, Avan Dabash as well in the studios. And let's take it off from the global setup, considering our markets turned out to be a bit of a disappointment yesterday. For the better part, we were holding on to the gains, and after a very, very quiet all through the week, we did see a move all the way up to that 19,400 mark, but no, couldn't quite sustain. And that selling came in led by banks in the last 1 hour of trade. Finally gave up all of our gains. But the cues this morning then, and the US GDP, that's cooler than expected. The US markets, however, have managed to gain for a fourth consecutive day. And Brent as well has seen a bit of an escalation as the US inventories have seen a bit of a decline. So, yep, the Wall Street indicators are still looking good, but our markets, we're stuck in a jam, Nikunj.
That to and forth indecisive move, I guess, continues. While for global markets, you would put the construct, which is that, look, I think right now there is a lot of momentum. There is bulls are on the right side of the news flow. Bulls are exactly getting what they wanted, which is that the US interest rate, every time Fed is talking about a US interest rate hike, it is followed up with a weak US GDP data, which means that inflationary concerns will not linger long. So the setup in the global market is something which is strong and supportive for the bulls, and that is surely having a rub-off effect on Indian markets, or it is having a rub-off effect on equities as in general. So if you frankly ask me what is helping the market from a free fall or from some kind of a gut-wrenching decline, I think it is the global setup, and globally, like I mentioned, that bulls are getting exactly what they want. Technically, there is strong momentum. The risk on trade, I think, is on, whether it is US tech stocks or Bitcoin. The US macro data, it is more favorable than less damaging, and that in a sense is helping the equity setup and the mood point, I think, in general.
Yeah, and just to stretch that point further in terms of what we witnessed in yesterday's trading day, it was no sort of a decisive move. Yes, we did come under pressure, yet another flat day of trade, and that was really in the fag end of the trading day, as Aisha flagged off. So 19,300, 19,350, that's where we've been closing for 3 straight days on the trot. And yet again, it's the broader markets that have been taking leadership comparatively. So on a month-to-date basis, we have declined about 2% so far. And if we're just going by the kind of moves that we've seen over the last many months, it has been 3 straight months prior to the month of August that we did manage to end up in the green. So yes, indeed, Nikunj, from a technical standpoint as well, for now we're pretty flat. And what are the trends pointing towards by way of the premium and the fact that it's expiry today also?
So Avan, the market action, I think, is getting very, very somber now. Look at the market setup at the beginning of the August versus end of the August. There is the inertia, I think, in large cap stocks is lacking and it is missing. In terms of commitment levels, the commitment levels, if one looks at the total open interest, compare that with where we were versus where we are likely to roll over or end the expiry, is not that encouraging. So the market, in a sense, is lacking interest, participation, and leadership. If history is anything to go by, this is how the September trend has been. 2020 down, 2021 up, 2022 September has been negative. So September historically has not been a great month, so to speak. So the way I see the setup is that the market is bereft of leadership. It's not getting from Reliance, it is not getting from banks, it is surely not getting from IT. Will this market get a clear leader, or will it get a leadership sector in the month of September? Question number 1. Question number 2, now that benchmark indices are showing signs of fatigue and they've got jammed, will this have a rub-off effect on the mid and the small cap stocks, or like in the month of August, the outperformance in mid and small cap stocks will continue? Point number 2. Point number 3, should you book profits or should you go short? Don't go short. Because while the market is lacking leadership, there is no decisive trend in the Nifty which is telling you that market wants to break down. So the strategy is, for the sake of turning bearish, don't turn bearish. For the sake of just because Nifty is not doing any fair does not mean markets will come down. I think the strategy should be very simple. You got to ask yourself a very basic question. Please do that today. If you can take a 15-20% downside and volatility, be in the market. If you cannot do that, I think it's time to send chips off the table.
Yeah.
It's very simple. It does not need extra analysis. I think now it's about managing risk. Whatever we may talk about Nifty and small and mid-cap stocks, I think now it's a function of risk appetite, which will decide how the month of September and what you should do in the near term. There are folks who can take a 30% volatility. So, well, then there's nothing to worry. There are folks who can't take a 5% downside. Then, sorry, sir, right now, then you could take the chip off the table.
Yeah, if you're still staying put and you have already taken that fall that we've had from the top of around 20,000 thereabouts, then maybe it's now not too late. But yeah, for the long haul, continue to stay invested. Well, let's talk about the weak links in the market. While yesterday, of course, the big curve really came in from the cool-off in the Nifty Bank. But the one sector which underperformed from the word go was definitely OMCs. Nikunj chatted with Hardeep Singh Puri as well yesterday. That was an ET Now exclusive. He was, of course, talking about the LPG price cut and stating that the government is going to be bearing the impact and it's not going to be the OMCs or gas companies, saying that he's not concerned about crude prices at $85 to a barrel and that OMCs, while they have been rewarding shareholders handsomely, they have seen reasonable and healthy financials as well. But yeah, the markets chose to ignore all that commentary.
Ashraf, there is one space in the PSU space which has not seen a rub-off effect of the PSU re-rating. I think is clearly the OMC space. Now, whatever you may say in terms of the attempt here for government to keep them alive, I think in general, OMCs are the first one which in a sense always gets squeezed out when it comes to managing the balance between inflation and energy prices. And that's where, given where the consideration of crude are, it is highly unlikely that you will actually see a cut. It is highly unlikely that oil marketing companies would be allowed to charge full margins. Now, oil marketing companies are so cheap that the temptation is that you should buy them because rest of the market has gone higher. I mean, you cannot have one space which is an important space to trade at that kind of a P multiple. But this temptation, I think in my sense, is that is something which is a valid concern in terms of why these stocks are trading cheap. Given where the energy prices are, the crude dynamics are, where the election cycle is, especially the state elections right now around the corner at the beginning of the year. So I think that if energy prices or crude prices, if they do not come down, then I doubt that oil marketing companies will be able to enjoy that kind of an operating profit margin. See, in spirit, you've deregulated the sector, but in totality, you've not done it. And markets are aware of it. So what is cheap will remain cheap. PSU banks turned when NPAs recovered. Defense turned when government started giving them orders. Railways turned when government capex started. BHEL is turned because it is getting order book. What is that upside for OMCs? I mean, they are the ones who have to play the role of, like the minister said, good corporate citizen.
Absolutely. In fact, here's exactly what the minister had to say about, the LPG price cut, the status of OMCs amid that LPG price cut.
The price of crude oil is determined by a global situation. We are dependent up to 80% of our requirements on imports for crude oil, about 55-60% on the import of natural gas. Our OMCs incurred a loss of 28,000 crores. Now, they are not operating on their own money, they raise money in the market. So you had to compensate them. So that 28,000 crores was compensated up to an extent of 22,000 crores. If you are to insulate the common man, I mean the economically weaker sections, the people who live below the poverty line, then both the government and the OMCs will have to do it. It's not as if the OMCs are collapsing. I can say with a degree of satisfaction that the OMCs today have registered very reasonable and healthy financial results. I'm choosing my words carefully. There are quarters when they do better than other quarters. But I think when the Prime Minister decides that the price of a cylinder, a 14-kilo cylinder has to come down on the occasion of Onam and Raksha Bandhan by 200 rupees, the OMCs are happy, the country is happy. OMCs have large businesses. Some of them make big profits in a quarter, some less. But they're all doing reasonably well.
Yes, indeed. Those are the cues coming in from none other than Hardeep Singh Puri. But let's shift gears and talk about the India strategy, the latest note that's come out from Jefferies. And while, yes, the focus is on high GDP returns, capex as well being the key point, and a housing upcycle this year, what Jefferies continues to stress on is the fact that, the elections are going to be critical as an outcome, and that political continuity is going to likely be the most outcome. And a big risk factor for India would be the small vote share swings and anti-incumbency, Nikunj.
See, first time someone's written about elections. First note from a big foreign brokerage, they talk about the, the fact that next year we have a general, we have election cycle. While they are pretty much endorsing the obvious in terms of what the moot point right now is, and this is what Jeffrey seems to be indicating, they are making a case for a political continuity. I'm quoting Jeffries here. Current Prime Minister Mr. Modi continues to be one of the most popular political leaders, and India has seen, thanks to a combination of various factors including solid implementation of social scheme, jobs, growth schemes, strong communication, the political continuity would emerge. That is a base case what they are working with. Then when it comes to the specific of the themes what they are talking about, it's all the way banks, Axis Bank, ICICI Bank, State Bank of India, L&T, Ultratech. What is the common theme here? Well, all of them are inward and domestic looking themes. So if you look at a combination of L&T and Ultratech, well, banks will give credit, L&T will be adding to the capex cycle, and if the capex cycle start, a company like L&T would benefit. So what they are essentially indicating and advocating to their clients is that stay focused. The political cycle is something which will not have a disruptive impact on the current market momentum. That is what Jefferies feels. And I think if one looks at the choice of stocks, what they're advocating to their clients, it is very clear that they're advocating their clients that you stay with this entire capex, stroke construction, stroke the domestic, rebuild India theme.
Yeah, absolutely. Okay, let's quickly revisit what the global market handover as well is like. Strong from US, like we mentioned, but Asia is a little bit all over the place. While Shanghai is marginally soft right now, Hong Kong continues with an uptick of about 0.5%. Korea is down, Japan holding up 0.5%. So it's a bit of a mixed bag. What's the GIFT Nifty then indicating? Once again, an absolutely flat start for us. I guess we'll have to deal with that reality of a flat Nifty for a while to come. But let me take it across to Vinny and find out what the global commentary has been tonight.
Good morning, and let's start with the commentary that we have coming in from Peter Schiff. Now, this one is important that he's highlighting in terms of the American economy, and he believes that Americans feel if the bad is here, then they have to wait for the worst to come, because he feels that both the inflation as well as the interest rate will rise sharply, and that could put the American economy into a further recession, and that could be causing a lot of people to lose their jobs as well, and that is what he believes is, and he called it the Biden economics. Furthermore, he's going to explain in one point, which he said very few people understand, is that if the US economy actually starts weakening, the dollar will fall, and in turn, when the dollar will fall, that will push up the commodity prices higher, which puts pressures in terms of the CPI as well as the bond yields, and also drains the consumers' purchasing power, in turn, which will be weakening the economy and perpetuating the cycle as well. So that's the commentary that is in terms of a bit of a warning coming in on terms of recession or weakening US economy, is what Peter Schiff is highlighting. We have Holger, who's talking about the German economy, and he's saying that the financial disaster lies actually in Germany is in the social security system, namely the euro 17 trillion in terms of the implicit debt, which is not officially reported, and obviously the official German debt ratio is at 66.3 times, which is not something that they are the reporting number is actually coming in at. So yes, keeping an eye out on that one as well. Lastly, we have commentary that is coming from David Rosenberg, who's highlighting in terms of the stocks that are poised to tumble in the economic pressure if the economic pressure actually continues to mount, and the historic surge in the mortgage rate means that Americans are now prisoners to their own home. That's the highlight that is coming from David Rosenberg as well.
Very much, Vinny, for highlighting all of those details and what exactly the global opinion is. Let's move right on and chat levels. Naresh Mirani and Kunal Bothra are here for just that. Good morning, gentlemen. And Kunal, let me begin with you. Do you think that if we don't manage to sustain around the 19,350, 300 mark, that it's opening the doors for a further decisive downside?
Good morning, Avan. So as of now, we are still waiting for that decisive breach below that 90,300 levels. We had many tough touch and go movements on intraday basis. There was just one day of mild close below that 90,300 mark, I think by a margin of some 10 odd points for the Nifty, but we've not seen a decisive breakdown on the indices. And typically we don't short a very dull market. So as of now, would not look to go short on the indices unless we go for a decisive breakdown below that 90,300 levels. We've initiated longs on the index yesterday with an expectation that probably with the expiry near, we could get into a process of bounce as well as a start towards a possible fresh expiry for the index on the positive side. So 90,300 on closing basis remains to be a support, and keeping that as a stop loss for the long trade.
Okay, let's find out what Naresh's outlook is. And Naresh, why don't you come in on the Nifty Bank Index? Although, yesterday was a down day, what has been the trend that you've observed, and how are you expecting expiry? What is it that you're advising one do with the Nifty Bank at the 44,230 mark?
So it continues to remain a buy on dips. And what we see today is going to be a day which is last day of the month, which sees a lot of ETF rejects. We'll see a MSCI based volumes in the last 30 minutes. So there should be some volatility on both the sides for the day, but the structure remains the same. If you look at the broader indices, if you look at banks, Axis Bank hit a new 52-week high. ICICI Bank sticks around the 940, 960 mark, HDFC around 1580, 1600 mark. So the Bank Nifty ideally expecting it to hold that 43,800 to 44,000 mark. And when it crosses 45,000, that is where the trend changes to up. So for now, expecting a slow and steady move towards 45,000 over the next few sessions. But today's volatility could be more due to a reject. So would not say trigger any stops, would wait for a move tomorrow to actually confirm more upsides or say a trend change on the downside. But for now, the broader market, yesterday we hit a small cap, new high on the small cap index, the mid cap index, mid cap 100, mid cap 150, etc. Even the Nifty 500 as well as the Nifty total market looks pretty promising. So eventually expecting a breakout also about 19,600 and 45,000.
Find out what exactly it is that our chartists are picking out by way of individual stocks. Kunal?
So I'll go with a couple of buy calls. The first one would be a buy on Chola Finance. That's a stock which yesterday managed to break out of the 50-day moving average after trading below this level for the last 1 month. So would suggest a buy, expecting the stock to start a decent short-term up move, 1160 as a target, stop loss at 1098. And DLF would be the other call. The stock has broken past about the 500 levels yesterday by a thin margin. But then again, a strong breakout, psychological breakout. Many of the other peer stocks have also started to show signs of a breakout as well as momentum. So would suggest a buy with 530 as a target, stop us at 490.
Right. Naresh, what about your stock-specific ideas?
So first would be a buy on Mahindra, and Mahindra, the stock hitting new, very close to new all-time highs. Short-term range breakout on cards here above the 1580, 1600 mark. Expecting a quick move towards 1700, stop loss at 1550. Second is a buy on Axis Bank. The stock has clearly shown relative strength in the whole correction in Bank Nifty. The stock hit a new all-time high yesterday, and it has made almost 4 attempts around the 1000 mark. Once it crosses 1000, that would be a short-term breakout. Expecting a quick move to 1050, preempting that possible breakout with a stop loss at 960.
All right, thanks for that, gentlemen. Let's move right on then. And stocks to watch, we've got Anisha right here with us in our studios to discuss that. And let's start off with BHEL. Another day, another smart move. What's the order win and what are brokerages saying?
Well, this year has been rather, started well for BHEL and other capital good companies as well. And you have another order win, and this is a large one actually coming in. NTPC has finalized the order for Lara Thermal Power Plant, which is almost 1600 megawatt plant. A lot of companies were in the fray, right from L&T. In fact, L&T was, one of the L1 bidders as well. But finally, the bid has gone BHEL's way. Of course, we do not know officially the order value, but 15,500 is what NTPC had earmarked for this investment. And the street is pegging that what might flow towards BHEL could be to the tune of almost 12 to 14,000 odd crores. In fact, when we looked at the numbers in the quarter 2 already, BHEL has managed to score orders worth 19,000 odd crores. And on a YTD basis, the number stands close to around 40,000 odd crores. The stock, of course, has also seen a bit of a re-rating of sorts. It's up, almost 45-50% this year already. But the brokerages are saying there's more leg to this rally, and they are expecting a re-rating of sorts to happen. And Nikunj, this is a theme that does play out usually ahead of elections as well, right? And PSUs is clearly coming back into flavor as well.
See, BHEL has two businesses. One new business which they are incubating in terms of power pumps, power storage. That is what got market excited, I think, a couple of days ago. Now, this is a traditional business which is called as the BTG business, which is where there seems to be an uptick in terms of the order book. BHEL is not at 50 rupees, it's at 120 rupees. At 120 rupees, you got to ask yourself is that what are the valuations and how the stack is looking up, and what are the margins, and are margins comparable to what the other power ancillary players currently are commanding. So you compare BHEL with margins of other MNC players, even domestic players like Thermex. I think BHEL still has a long way to go. And if you frankly ask me, BHEL in last couple of years has not really demonstrated muscle in terms of having a very strong giant leap forward. So whatever BHEL is doing, I think markets have liked the incremental rate of change. The order book seems to be improving, but the next frontier for BHEL, I think, would be a function of what are they able to do in their new businesses which they are incubating. So for me, that really would be the litmus test, so to speak, because getting order is great. They've got the Vande Bharat order also, but that's not something which is going to be yielding them a lot of margins. That's my limited point here. So I'm not a big fan of any company which says that I've got an order book. I think it's execution, it's margins, it's capability, it's ability. These are the things which I think matter.
Okay, from cap goods, let's shift focus to autos. Anisha, what's the preferred brokerage bet?
Well, no surprise there. It's Maruti, and that one is coming in from JP Morgan, and they are actually opening a positive catalyst watch on the counter because they believe that the stock price of Maruti will outperform the benchmarks and the peers on an absolute basis over the period of next 2 months. They are saying that channel checks suggest that wholesale volume prints should be quite strong, and this is what we heard from the management yesterday as well. The strong SUV mix that Maruti has managed to create for itself is also something that should augur well for them, and the fact that there are a slew of launches lined up from Maruti, despite the ones that we have seen recently doing quite well for them, is also something that should support the earnings of the company going forward. And of course, there's auto sales data that will come out tomorrow. We already heard from the management yesterday that August has been a very strong month for them. So things seems to be skewed on the positive side, but then you're spoiled for choices when you come to the auto space, right? There are a lot of companies which have done well but still look good.
See, let's just stay with the passenger car space, and let's take a deep dive and say that what are the factors or what are the vectors which were at play in last 3 years. SUV coming back has been nothing short of unreal. That has led to re-rating of a stock, that has led to re-rating of Mahindra and Mahindra. Then you had Maruti, which is attempting to make a comeback. The SUV market has gone above 20%, and the supply disruptions which they have suffered, I think that in a sense has been taken care of. And then there is always this unit transfer which has happened, which will aid to the profitability of Maruti. The question you to ask yourself is that how will the balancing act for Maruti move? One side, the sedan business, which is where the dominant market share is of 55% plus. That business is not growing. They're not losing market share, but that business is lacking pricing power. Second, they're trying to reboot their SUV portfolio. They have a brand, they have distribution, they have a reach, and they have a customer appeal. So will the slowdown in the traditional Maruti business, will that be taken care by the new SUV business which they are able to do? I think the turning point for Maruti would be that when they are able to really challenge, let's say, Mahindra and Mahindra in terms of the leadership in the SUV market. And if they're able to do that with some new launches, what they've had, let's say, Jinmi versus Thar and some other new launches, then I think Maruti could be in for a very good period, because that means that they've demonstrated their ability to really gain market share in a new category. They don't have a presence in EV. So the EV charm has been taken over by Tata Motors. Anything when it comes to EV, Tata Motors. Anything in SUV, Mahindra and Mahindra. Anything in mass market, Maruti. Can they really use their charm and their ability to do something disruptive? For example, like I said, Thar versus Jimny. They came out in the challenge Thar. If they're able to do that in the SUV market for next couple of quarters, and if market get a sense of that, then Maruti can once again become the leadership stock.
And that was the indication yesterday as well, right, from Shashank Srivastav, that while the inventory is at a 4-year high, the new models, which are the SUV models, are the ones selling like hotcakes.
Yeah, see, from a company standpoint, that's fantastic news, because that SUV traditionally is higher margin. SUV repair cost is expensive. SUV maintenance is high. SUV, ancillaries where you will actually make money in terms of a dealership network. So more SUV selling is more turnover and more margins for Maruti. So the slowdown in sedan versus the uptick in Maruti. See, Mahindra's captured that trend beautifully. Can Maruti really be the challenger to a leader called Mahindra? That, I think, is the trick for Maruti now.
Okay, in fact, let's just hear out a clip of that conversation that we had with Shashank Srivastav just yesterday, as he said that certain models have seen excess inventories, which will lead to discounts this time.
Have certain models which have got excess inventory, sometimes going up to 50 days of stock as well. And there are others where you still have pending bookings. In other words, there is a waiting for those models and therefore very low inventory. Clearly, however, since July, we have seen a uptick in production in even those models which were earlier in short supply. A couple of years have been pretty tight as far as inventory is concerned due to various reasons: COVID lockdown, you had supply chain disruptions, semiconductor prices, and so on and so forth. But yes, the last time we saw this level of inventory of almost 300,000 in the industry was in September 2019.
Okay, let's just take a step back and let's analyze what the macro or rather global macros as well are looking like. While of course S&P futures currently are quoting flat, but it was a 4-day of consecutive winning streak on Wall Street overnight. Arvind Sanger joins in on the show right now. Arvind, hi, morning and good evening to you. Thanks for staying up for us.
Hi.
Just wanted to understand, how are you reading into the US GDP data?
Well, I think the U.S. has proved to be surprisingly resilient in terms of the economy. And inflation data, employment data, others are suggesting that, actually employment and other data is suggesting that inflation pressures may be abating. So that is the Goldilocks scenario, right? That inflation comes down, but growth remains relatively resilient. So we avoid a recession and we kill inflation. I think that's the current hope. But, we swing, we are kind of bipolar right now. We swing between 1 week, Fed is going to have to raise interest rates a lot. And the next week it is maybe the Fed is done and the economy is fine. So right now we're in that, hope phase of that bipolar and the data on Friday, which will be related to, employment will be another important data point that'll give some hope or maybe dash some hopes if it turns out to be, surprisingly strong in terms of the economy. So that seems to be the current, I'm not ready to declare this as victory yet because September is a tough month and there's a lot of data we'll have to see whether or not the current optimism lasts.
What's the view, Arvind, as to how you're looking at the bond yields trending in light of the fact that it seems that the Fed is clearly going to have, inflation and jobs on their mind as of now in terms of the data points?
Well, the bond yields, the 10-year bond yields seem to be breaking out above 4.3. Last week and this week they've rallied to be, down a couple of hundred basis points, not a couple of hundred, but 20 basis points. And so right now there's optimism that the bond strength may be abating, and again the hope is springing again that the Fed is done. So the bond market is very much linked to the equity market because the two are now watching each other, or the equity market is taking the lead from the bond market to see whether or not, the inflation fears are going down or not. And right now it seems like the inflation fears are going down. And again, we're going to be very data dependent. But the good news is that the economic fundamentals are remaining relatively resilient. Everything that we are seeing suggests that the economy is still, chugging along. And that, I think, is the best news, that after such a significant rate increase over the last, several quarters, the economy is still hanging in there and staying relatively resilient.
Great to have you then on the show. Thank you so much for taking the time out. The GIFT Nifty, though, indicating an absolutely flat start for us. So once again, choosing to ignore the global handover. On that note, we're going to take a very quick break. When we come back, all the stocks to watch this Thursday morning.
Welcome back. Let's put the spotlight then on the latest India strategy note from Bernstein. They believe that India must step up its focus on infrastructure and manufacturing. What else are they recommending for India? What's their view? We've got Sharad here with more perspective. Sharad?
Well, yes, a very interesting note coming from Bernstein, and they have actually stated that China's meteoric rise was there, and they have stated from 1977 to 2010, China's GDP actually went in a double-digit growth, coming in almost 10%. Now, what actually impact happens for the Indian markets, that is important. They have asked the question that what should India do to actually repeat China's success over the last 3 decades, which China had. Now, they're actually focusing on stepping up the infra as well as the manufacturing segment, and also the boost would be coming in the policy when it comes to the overall global policies. Now, also the labor productivity through the redeployment into higher productive areas is something which they have stated, and the import of technology is something where the development would happen. But they have also raised certain queries, and they have said that India will not only be replicating every bit of China, but also growing in their own way itself. Now, looking at the numbers, they have also stated that India is in a better situation than in the 90s and also in the early 2000s. Now, India can actually scale up its economy going viable ahead, and especially the opportunities are coming from the people as well as the corporates. And lastly, the continuation of the similar policy going ahead with a stable government would also augur well for the Indian economy.
Very much, Sharad, for giving us those details. Let's connect with Chakri Lokpriya as well, who joins in on the show, and have him share his outlook on the markets. Chakri, we were actually looking at the streak of order wins from a company like BHEL, and that has been pretty phenomenal since the start of the year. Just recently as well, a fairly sizable order is what they've bagged in their kitty. What would be your outlook, given that this for the longest period of time was one of the slowest moving stocks? Now, what's your sense of BHEL?
The BHEL has got a new leash of life with a renewed interest in power. And power, always India has been a power deficient country, but now it's a combination of both thermal and green energy. Now, after these order wins for BHEL, I think their earnings is going to go up significantly, i.e. is going to go up for like 5 or 6 times. And so this kind of an earnings revival, and that, these are, large projects, the EPC projects that BHEL needs to execute over several years. So what that does is, provides order book visibility, earnings visibility. The company's multiples are not expensive at current times. And therefore, I think, even if you assign a far lower multiple than it traded in the past, BHEL can trade much higher.
Okay, fair enough. What about your sense as to, since you touched upon the power sector as a whole, even the likes of PFC, REC, a lot of names within this space have been showing increased resilience. Do you believe that this very ignored sector for a long time now merits a mention or a relook for the long term?
Indeed, absolutely. And, just like BHEL is going through a new leash of life, so is PFC, Power Finance, and REC. I remember very well participating as an anchor investor in IPOs of these companies, and they were priced at 1.5 times book then. Today, they trade at less than 0.7 times book, half the valuation. Now, with the growth rates going to far exceed what it did in the past, I think it's just a matter of time. The stock even trades closer to its book value and higher, so which means there's still a lot more upside from current levels, and also the dividend yield on these stocks, even at current prices, is close to 6-7%, which means it's better than putting in a bank FD.
Okay, let's just take a quick break from that and hear it from my colleague Anisha, who had a very special interaction with the MD and CEO of LTIMindtree, Debashish Chatterjee. Let's hear out a sneak peek of that conversation.
Well, we have said the 17 to 18% exit rate. That's what we are aspiring for by end of this, by Q4. And, we have a plan. We have a very specific program within the organization to improve the margin. And that's why we have made a commitment that 200 basis points over the next 4 to 5 years. We are pretty much on track.
There was also this aspiration of $10 billion, right? Right now, what, you're sub $5 billion? When do you see that happening? 2030?
Well, I think it will be before that, but the aspiration holds still, the aspiration is very much there. And again, it's the aspiration of the group, our group chairman and Mr. A.M. Naik, our Group CEO, Mr. S.N. Subramaniam. I think they have very clearly articulated this plan. And
they've given you this target that DC you have to achieve this target,
yeah,
right?
I think, it is not me, it's me and my team who have to get it done. And I think it's achievable. And if you look at the overall aspiration they have been very supportive in terms of what we have done so far and what we want to do. And I think this 10 billion mark has to be a combination of organic as well as inorganic. And I'm very confident that given the credibility that we have in the marketplace and the credentials that we have, I'm sure we can do it over a period of time.
Interaction at 10 a.m. But in the meantime, lots of stocks will be in the spotlight on the back of the MSCI adjustment today. So the likes of PFC, Ashok Leyland will all see inflows. ACC and 361 could see outflows. Let's find out which are the other stocks and what the latest updates are in terms of the flows. We've got Samit here with the details. Samit?
The flows or the adjustment regarding the same is expected to happen today on August 31st. Now, these flows are likely to come in the last 30 minutes of trading hour. That is around 3 to 3:30 p.m. And there were around 8 addition, 1 deletion from the standard index. While when it comes to the small cap index, there were 6 stocks that migrated from small cap and 2 fresh inclusions in the small cap index. Now, coming to the standard index, firstly, IDFC First, PFC, Ashok Leyland, REC, Supreme Industries, Cummins, Astral and HDFC AMC are getting included. The flows expected in these stocks are around 158 to 204 million US dollars, which is on an average more than 5 times the 20-day average volume. One stock that is getting deleted is ACC. Outflows are expected to be to the tune of close to 94 million US dollars, which is nearly 5.3 times its average daily volume. And when it comes to the small cap index, on the addition side, we are seeing very smaller names, but the inflows in these stocks will be very small. But compared to that 20-day average volume, the number of shares that could be traded today could be on the higher side. Firstly, on GNTD, if you see, the inflows are expected to be only 2.2 million, but that is nearly 8.6 times its 20-day average volume. Similarly, when it comes to Nexus REIT, Kirloskar Pneumatic, Tamil Nadu Mercantile Bank, ICRA, the flows that could be today, that could be seen today would be nearly more than 4 times its 20-day average volume. In case of Ather, Tega and Hindware Home Innovations, the flows could be more than 2 to 2.5 times the 20-day average volume. And one stock that could see outflow, and that is 361 because of lower weightage. There's an outflow expected of around 3 million US dollars, which is nearly 3 times its 20-day average volume. So keep an eye out for these stocks in trade.
Chakri, let's get right back to it. And what's your understanding of how trends have shaped up within the entire auto space? Do you think that with Maruti as well coming out with their new launches and focus on EVs, that it is likely to emerge as one of the frontliners within the auto space? What are your top picks?
Maruti is one of the clear market leader. It has more than 50% market share in the passenger vehicle segment. And so, and now it's introducing, I think, 6 or 7 new EVs by 2030. So, which means that in the mass mid-market, the company will continue to maintain its leadership with the launch of these 6 or 7 new EV products. This was the big fear about Maruti, that they did not have an EV lineup, and that fear is now kind of abated. And therefore, I think its multiples will re-rate and its earnings will be revised upwards. So I think Maruti looks good here. And Hero Motors, the similar issue with the launch of their new product. Again, now there is competition, a good product compared to Bajaj and its competitors. And therefore, I think Hero Motors also is likely to see earnings upgrades as well as a multiple re-rate.
Chakri, as a sector, what's leading to underperformance from the private banking majors? I mean, everything from an HDFC Bank to a Kotak to an ICICI Bank.
I think in the case of HDFC Bank, I think it's more company specific after the merger. I think they'll have some cost of funds issues until that settles down in a couple of quarters. I think that it's in a wait and watch mode. And Kotak, on the other hand, is still a very expensive bank, multi-valuation wise. Excellent bank, but expensive bank. In the case of ICICI and Axis, I think the big run-up has happened. They're trading at their historical price-to-book multiples. So if it continues to do that, so you'll make that 20-25% return over the next 1 year or so in each of ICICI and Axis Bank. But I think, there's so much of if you look at the mid-cap banks, if you look at the NBFCs, they all have derated in the past. And now with the valuations catching up, I think that's where the interest is more right now.
Right. Okay, that's the take coming in on which way banks are headed. Kunal, what's your sense individually on the Nifty Bank and what's looking like the weakest link amongst that?
Well, apparently the weakest link from the banking indices are actually the private sector banking stocks, and I would not say the weaker end in the sense that these stocks are correcting very sharply. Most of the stocks in the large cap private sector banks are just lying low into their lower end of the trading range. There is not too much of an uptick into these stocks, neither a major correction which is seeped into this name into these kind of stocks, except for yesterday's price action throughout the day right from the start, where many of the private sector banks, they sold off from their day's highs. There is not too much of a trend emerging into this space, and that's where I would believe that there is some sort of underperformance which is actually coming in.
Okay, let's move right on then. And today, what's the stock on the editor's radar? It's Max Financial Services. Let's discuss this. Lots of triggers. Axis infusing about 1,600 crores and valuations as well as at a steep discount compared to peers.
Okay, there's one more trigger, which is that the erstwhile promoter and the pledge holding. So, Avan, while fundamentally, if one looks at Max and compares the franchise value, it is trading at a discount. But the reason why it's trading at a discount is because the other franchises which are there in the insurance space, they have a bigger commanding premium and the return ratios are better. So the prompt for our viewers here is that Max Financials, yes, it is trading at a discount, but that can be justified. But the trigger and why we have this stock on our radar, because it's a report from Investec, is because of the overhang of the promoter selling. And the promoter pledge is something which in a sense has been this eyesore for the stock, because markets knew that sooner than later the promoters would be selling. Last couple of days, I think they've sold about 3.5% stake, and that is an indication that the promoter deleveraging is moving in the right direction. That's part one of the story. Part two of the story, I genuinely feel that insurance should come back. I think insurance is one space where the trends have stabilized. The margins have stabilized. That COVID up and down which happened, that seems to be stable. The budget derating which happened, that seems to be stable. So I will not be surprised in the second half of this year, at a time when banks are underperforming, money actually will start migrating back to, let's say, AMCs and insurance. And within insurance, Max is cheap. There is a trigger in the near term. And given that Axis can give it scale in coming years after the capital infusion, the historical growth rate versus future growth rate, the future growth rate could be better.
All right, future growth rate could be better. And with that, Aisha, I'll hand it right back to you.
Okay, that's the stock, Max Financial Services, that we're talking about right now. But Chakri, what is it that you're making of the larger insurance gamut?
Max Financial Services is actually kind of better placed because of all these triggers. And, with Axis Bank as a distribution partner, a long-standing one, and that's set to expand its commitment to Max. I think that bodes well, given the valuations are cheap. But insurance as a sector is going through all these pricing issues. They have the volume growth in place. That's not a problem, but the pricing. And therefore, it will be one of a gradual re-rating over time, rather than an immediate boost to earnings in the near term.
Naresh, everything can go up, but can I say that not hold true for LIC?
Not necessarily. We just need to make a few memes and it would turn around. So the fact is, it has gone through a lot of, say, a period of where it has gone sideways. But if you look at it purely on a technical basis, it has started making that reversal. So the stock topped out at 770 last year, went down to 540. And since then, it has slowly moved up to 650 levels. The last big gap down where we saw a tick for the stock was around that 670 mark. So once it sustains 670, 680, it would actually be a short-term breakout. So the stock is actually on the radar for a breakout. It's got tighter and tighter in the range. And now it trades in a 10-pointer range for the last almost 1 month. So could be interesting watching it if it can sustain 670 odd levels. we could go back to 770 and higher.
Fair point. What is your view on LIC specifically, Chakri?
LIC, I think it's one of those valuation-wise clearly very cheap. It's a company which is stuck with, it's the discount assigned to a government company having such a large government stake, and the issues associated with that. In terms of LIC is a very uniquely positioned versus other PSU companies. So I think that one, it is still impacted by the larger insurance issues of lack of pricing power. It has a market share, valuations are on its side, but there is no immediate business trigger which will give a kind of an upgrade to its earnings. That is what is holding back LIC.
Okay, Chakri, stay on with us. We've got some more stock ideas coming in. Let's hear out Sanjeev Haseen and what's the stock that he's betting on?
The best play, which is going to be Star as far as the AI circle goes, and which is seeing huge amount of order inflows and high margins. Their attrition has been the lowest, and I think LTIM is one large cap which I can now bet on because it's on the index. So like I said, I'm focusing on large caps in the index. LTIM, Reliance, ICICI Bank, Axis, and if we are going to see Bank Nifty expire above 45,000, then both these large caps have to join. But LTIM is my stock for this from here till Diwali. 6,000 plus is coming on LTIM by this Diwali.
Okay. The markets are, or the GIFT Nifty is indicating that things are just not going anywhere. Naresh, we spent a lot of time yesterday discussing Tata Chemicals, and we discussed Tata Chemicals the day before also. But yesterday, if one looks at the intraday graph, what looked like a promising breakout turned out to be a disappointing day or disappointing trend.
So Tata Chemicals has been a stock which has made too many false moves over the last 2 months. So the problem is every time it has crossed 1,000, 1,050, it has again pulled back below 1,000 levels. Now the case pin point is even if we go further back in 2022, 1,000 to 1,050 was a resistance. We crossed about this only temporarily on some news back in August, September of last year, where it went to 1,200. So it has multiple resistances around this part. 1,050 to 1,080 now has become the new resistance. So technically, yes, the stock is trying to make a breakout move. Out here, I would keep a stop loss at 1,020 and see if it can break out going further. But after a couple of stop losses, even I have been not looking at it as closely. Got stopped out a couple of times. Every time it has flopped. So would wait it out, but technically the structure still looks positive.
Shifting gears, Zomato. Who's going to talk about Zomato? Chakri? Naresh?
Yeah.
Kunal is not there. He would have also spoken about Zomato. He's ordered something, I know it. He's gone to deliver the food which is coming from Zomato.
Zomato as a stock has done exceedingly well. This is one thing which is kind of made a small, tiny profit, but so it showed that it can make a profit, I guess. And now some of its subsidiaries have done a funding raise, and that was at okay valuation. So that kind of provides a bit of flow on its hyperlocal delivery business, which there was a lot of skepticism about. So a combination of its regular business plus that the hyperlocal business, I think is kind of helped the stock, but it's done its bit. Now I'm not too sure how much of immediate upside is left in the stock.
Another stick pace, since we're talking about Zomato, has been the entire hotel stocks. In fact, there are a couple of brokerages as well who are talking about how they're bullish on the entire hotel pack. Well, their top pick may be Chalet, but just look at the moves on some of these hotel names yesterday. I mean, starting off with the big boy Indian hotels, which held out almost about 6% in trade yesterday. Chalet was up 3%. And then, that can be said about the entire pack as well. Let's bring on board LTIMindtree as well as IHH2. All of these stocks were holding out very, very smartly. Naresh, what is it that you're making of this big spurt across the sector that we saw within hotels yesterday?
So technically, the sector has gone through this phase of consolidation for the last few months. The trend continues to remain positive across the board. So starting off with, say, Indian hotels, if you look at what happened for the stock, it went into a up move. And for the last almost 3 months, it was in a tight range of 380 to 405. So that is where it gave a breakout yesterday. Very strong volumes, the highest volume in the last 3 months. So same as the structure, if you go to LTIMindtree hotels, you'll see for the last almost 3 months, it was in the range of 90 to 100, broke out above 100. Made a move to 110, took a little dip, and now again trying to make a move above 110 levels. So the case in point is the sector went through the first cycle wherein it made a huge move in 2022-23, then consolidated, and now we are getting into the next part of the cycle. The belief has been low on the sector because of the cyclical nature, and previously from 2007 to 2021, the whole sector did terrible. The returns were zero for Indian hotels. Same way, EIH is the one which is relatively underperformed. But what is interesting for the stock is the stock used to be 220 in 2018 and used to be 240 back in 2007. Now the stock has come back to 240 after almost 15 years roughly. Out here, it is very similarly placed to what Indian hotels was placed at 160, 180 when it made that high about 2007. So one by one, we've seen a lot of hotel names do well, even the small cap names. So we are into the next leg of the move. In the short term, there could be another, say, 15-20% move over the next few months, and then maybe a pause. So positive on the whole sector, buy on dips continues.
You know, Chakri, wanted to get your senses as well. I mean, food aggregator, food, you had Jubilant as well, which perked up very smartly yesterday, and the hotel names. It's clearly the urban consumption which is in the limelight once again. What within the hotel pack do you like?
You know, all the hotel pack, the entire hotel pack is looking good, you know, whether it's Chalet Hotels, Indian Hotels, EIH, LTIMindtree, you know, all these companies are seeing a business revival, corporate customers coming back, domestic, private functions coming back, F&B business increasing, and having a pricing power which this industry did not have pre-pandemic. A combination of all these things, and they did not add capacity because of, thanks to pandemic, they did not add any capacity in the last 3 years. So everything is flowing to the bottom line. Their operating margins will increase in this for the next year and the following year. And therefore, you know, I think Indian hotels did nothing. It has a huge amount of debt that has come down. Similarly, you know, Chalet Hotels in a better space. So therefore, I think the space will continue to do well.
We're going to move from hotels and go back to the month of August. Banks and IT, or IT and banks. Well, banks are down, IT must be up. Will this trend continue in the month of September? And that is what I think is important here. That's yesterday's data. Now, month of August. Banks yesterday were down. In fact, HDFC Bank yesterday led the decline. But if one really looks at how the month of August has moved for the Bank Nifty and for the IT index, you would actually see a bit of a divergence there. And the divergence, I think, is very, very prominent in the way how things are stacked up. Banks are down 3%, IT is up 3%. So, Naresh, will this convergence between bank and IT, will it meet at some point in time, which is banks will start catching up and IT will start underperforming, or will this convergence or will this divergence only exemplify or amplify? So, will there be divergence or will there be convergence?
So my view is banks could do better from here on. As an index, it could be difficult to say because HDFC Bank and Kotak Bank have not gone anywhere. But if you look at an ICICI Bank, Axis Bank, a lot of other banks look very promising, and IndusInd Bank. So the view is it could get selective. The top two, say the top heavyweight, may not do anything like HDFC Bank, but rest of the banks are in a strong trend, and they should actually take a much bigger move going forward. So you have ICICI Bank at 960 levels, which is where the previous high was. Axis Bank closer to 1000 is the previous high where it was. Then you have IndusInd Bank, previous high at 1430. The stock is at 1390. So clearly, these are 3-4 names in the banking space which are waiting for a breakout move, which is possible. So from current levels, they could do well. At the same time, IT is in a sideways consolidation move, the large cap names. So the only interesting name in IT is HCL Tech, which is making structurally strong patterns. So overall, the views banks could do well from here, specifically ICICI, Axis, and IndusInd Bank.
Kunal, again I go back to that same point again, which is that at the upper end of the range, Kunal, we are getting into resistance. At lower end of the range, we are getting into support. But if I look at yesterday's price action in isolation, just Kalka market, only yesterday's market, intraday graph please. We reversed 100 points from the day's high. We did not latch on to global cues. And today we are about to open flat. What are the chances that after a flat start, we may just fall more?
I don't see that as a major chance and a major probability. So, Nikunj, the indices, they tend to mirror what happens to stocks, or they tend to replicate what happens to stocks internally. What's actually happened is that in every phase of a market trend, when there is a sideways range, when there is a breakout, uptrend or a downtrend, there are sectors which change their patterns as such. So for example, in this month so far, you've seen the Nifty Pharma Index actually underperforming, the Nifty Realty Index actually being on the negative side of 2.5 to 3% approximately. Banking stocks are down some 2.5 to 3% approximately, but the IT index has managed to make a comeback. So it's a classical example of a churn which has happened. In a bear market or in a very sharp correction, you would probably have most of the sectors or large part of the sectors underperforming in the benchmark index, as well as giving negative returns. But when you have sector churns where there are few sectors which tend to offset the market gains, we call that as a corrective phase. Then we go back towards the traditional phase, that which are the strong support points that every time the indices tend to take or retest at a certain level, you see a bounce back on the index. That happens to be closer to 90,300 mark, say plus or minus 50-100 points or on an index on a spot level basis. And the best part about the market so far is that the rollovers for the next month is still at 110, 120 points premium for the index. That would not have been the case had it been an extremely bearish or a negative view for the indices. These are a few of the reasons why I would not be extremely bearish on the indices. Yes, we might go through a corrective phase. There may be another 100-point odd correction, which could probably be in the offing somewhere down the line. But then, whether this could have a major impact on the negative side, I have my reservations there.
Chakri, what's your view on the Zee saga that's playing out? Yes, the SAT is saying that the Sony merger with them is a public interest issue. Today then as well, the spotlight is going to be on the NCLAT hearing out IDBI's plea for insolvency proceedings. What's your take?
You said it all in terms of, there's so many moving parts in the case of Zee, and that, kind of detracts from its underlying fundamentals. Underlying fundamentals actually are very strong. If you look at the current price, it does not give any valuation to Zee's OTT business. And you put whatever kind of multiple that you want on its existing business, it's still an undervalued stock. But I think that will get ignored because of the current NCLT promoter issues and all the other factors that impact it. So until we see greater visibility, I think it's best to stay away from Zee.
Stay away from Zee, that's the advice coming in. Naresh, just wanted to get in your take on the charts on Zee Entertainment.
So Zee should now continue to stay in this band of 290 to 250 going forward, unless there is a new trigger. 290 is the price point where it has seen a previous gap up back in March of 2022. Then a recovery in October of 22 also. We saw the stock peaking out at 290. Even in the current news, we saw a spike and it peaked out around 290 levels. So 290, 300, 290 crossing would be the next indication, but that would require some bout of news. So technically, yes, the stock has bottomed out. It has made that 180 to 200 was a strong base, and now 290, 300 is a resistance. If that crosses, then maybe we can go towards 380. The only reason it starts looking interesting is the fact that the whole media space has started doing well. So Sun TV has also broken out on multi-year charts. We are seeing the smaller names also do well. So out here, would wait for a move about 290, but at current levels, the better choice would be Sun TV because there is no news around it.
Meantime, I just wanted to get in a take as well on some of the other stocks that will be in the spotlight today. For instance, you've got a Titan. They're talking about how now they're looking at a wider play. Premium watches is something that they're clearly going to focus on. Venky's as well in their annual report indicating that the growth in the poultry sector is going to continue to be fairly strong. So those are some of the other stocks that will be in the spotlight along with that, and SJVN. They're seeing that they see an annual revenue of about 10,000 crores from operational power stations over the next 3 fiscals. So these two are going to be some of the newsmakers. And Chakri, you know, one sort of resounding theme that we have been seeing across the board seems to be premiumization, be it autos, the consumption space, or sectors really across the board. How are you looking at this theme really playing out from a stock-specific standpoint?
You know, you're seeing it in the hotels where you know, there is a greater amount of dining out. For instance, if you look at consumer good companies, you know, companies like Dixon have actually benefited because, you know, they are the ODM for many manufacturers. They have the ability to, you know, sell various brands, and the customer doesn't know which brand the underlying company is manufacturing, but the Dixon benefits. So I think it manifests in several ways. Now, if you have the new EMS companies, now with the EMS companies with the electronics manufacturing, which under the PLI, will also benefit because of a customer premiumization. And so the range of the sectors that will benefit is actually quite widened now.
Some mid-cap ideas as well going. Naresh, what's on your list?
So I would stick with the hotel pack, which is where Indian Hotels, which gave a breakout yesterday. Very large volumes and a breakout confirmed above 405, 408 levels. Could see a follow-up move over the next few sessions. Target at 450, stop loss at 405.
Let's get your top mid-cap call.
Hindustan Copper is something which looks attractive from the mid-cap arena. The stock is trading at 150 plus levels. Would suggest a buy with a target of 165 and stop loss at 152.
I mean, Indian Hotel, we've spoken twice yesterday, 3 times on Monday, couple of times this year, several times last year.
So anything which is profitable, a trade, you should keep doing it. So that's the simplest way a trader works. There is momentum, continue to participate when the momentum subsides. So the last time I moved out of Indian Hotels is after it subsided around the 380, 400 mark. And now we are seeing a fresh move. So we are taking a fresh bet, taking a small stop loss and going ahead. And it's not just Indian Hotels. We are seeing a breakout across the board. It is LTIMindtree also. Chalet Hotels has broken out. Would be actually starting to gun for smaller names also going forward.
Chakri, great to have you on the show. Thanks as always for taking the time out. Let's also tell you what else is happening outside the world of India equity markets. And Chinese private property player Country Garden has now warned that it could default on its vast debt as it reported a loss of $7 billion for the first 6 months of the year. Now, the company confirmed that it had missed interest payments to holders of some of its bonds earlier this month. In fact, another real estate developer, 1K, also reported lower profit in the first half of the year. And after Niger, now military officers in Africa's Gabon have declared a coup hours after the re-election of the incumbent president. In fact, the president has been put under house arrest, and borders of the country have been sealed until further notice. Gabon's mutinous soldiers say that General Brice will lead the country as the new head of state, according to reports. And preparations have picked up speed ahead of the much-awaited G20 summit in New Delhi, which is scheduled for 9th of September. A beautification drive is underway in the city. In fact, 3 high-tech nurseries have been set up across the city, and approximately 20 sculptures have been installed at 12 prominent localities, along with 11 fountains too. But in a concerning revelation, Delhi has also taken the unfortunate lead as the world's most polluted city. And, unfortunate the timing as it may be, like we just told you, this comes on the sidelines of the G20 summit. But this is according to a recent study from the Chicago University. Even more alarming is the study's prediction that if the current pollution levels persist, the average lifespan of Delhiites could diminish by an alarming 12 years. Now, urgent intervention is imperative to mitigate this impending health crisis.
And meantime, this August is set to be the driest August ever in India since 1901. The country has received less than 190 mm of rain in the month of August. States like Gujarat and Kerala have a deficit of nearly 90%. Most of the deficit is in Rajasthan, but Karnataka as well at 74%. So that is something to monitor. Meantime, the world champion and India's javelin star Neeraj Chopra is eyeing to continue his winning streak. He's all set to compete for the Zurich Diamond League title today. The finals are scheduled around midnight. Remember, he's already finished at the top in Doha in the month of May and as well in June. And a treat for the sky gazers as bigger, brighter and more rare supermoon is going to light up the sky. Astronomy enthusiasts and stargazers around the world have seen a remarkable occurrence, and adding to the spectacle, the super blue moon has also shared the night sky with Saturn.
While the pre-open rates for the Nifty are indicating once again a very quiet start and the rupee seems stable around that 82.67 odd mark. What are the individual stocks that are going to be on the radar? What's the khabar? Sharad is here to tell us all the buzz on Venki's. Sharad?
Well, yes, in focus we are having Venki's, and what we are gathering from our sources is that the company is expected to soon launch its own meat delivery services. Now, the product suite, what we are hearing from our sources, is expected to be raw meat as well as semi-prepared meat. We did some channel checks also where we got to know that the maize prices have actually corrected by almost 16% from this year's highs, and this is important because roughly 70% of the total costs come for the feed via maize as well as soya. Apart from this, even the management had stated that the second half of this fiscal year will see the margins coming back on a strong manner. Also, the important thing is that inquiries have actually picked up post the ending of the Shravan season, and we are seeing healthy demand coming from the dealers. Also, important thing is that the chicken prices still actually are on the higher levels because of the unseasonal rainfall being seen. Now, the stock itself is up almost 7% also from the recent lows as well, and one domestic house which is tracking the stock, which is Quantum Securities, they have given a target price of 2,270 rupees with a buy rating.
That's Venki's, and we understand from the bars that they're looking at their own delivery platform. Let me now toss it across to Nikunj and find out the stocks on his radar this morning, and he's highlighting the biggest trigger for Max Financial Services.
There's one more trigger, which is that the erstwhile promoter and the pledge holding. So, you know, while fundamentally, if one looks at Max and compares the franchise value, it is trading at a discount. But the reason why it's trading at a discount is because the other franchises which are there in the insurance space, they have a bigger commanding premium and the return ratios are better. So the prompt for our viewers here is that Max Financials, yes, it is trading at a discount, but that can be justified. But the trigger and why we have this stock on our radar, because it's a report from Investec, is because of the overhang of the promoter selling. And the promoter pledge is something which in a sense has been this eyesore for the stock, because markets knew that sooner than later the promoters would be selling. Last couple of days, I think they've sold about 3.5% stake, and that is an indication that the promoter deleveraging is moving in the right direction. That's part one of the story. Part two of the story, I genuinely feel that insurance should come back. I think insurance is one space where the trends have stabilized. The margins have stabilized. That COVID up and down which happened, that seems to be stable. The budget derating which happened, that seems to be stable. So I will not be surprised in the second half of this year, at a time when banks are underperforming, money actually will start migrating back to, let's say, AMCs and insurance. And within insurance, Max is cheap. There is a trigger in the near term. And given that Axis can give it scale in coming years after the capital infusion, the historical growth rate versus future growth rate, the future growth rate could be better.
All right, let's find out what our Chartist index calls us. We're bracing ourselves for the market open this expiry day. And what is it that our Chartists are anticipating, given that it's been nothing short of days and days of consolidation? Looks like today it's towards a hold call. Kunal Bothra, though, sticking his neck out, saying that it's going to be a buy recommendation on the index at the current levels. That's the market moodometer. Hold on the Nifty.
top stocks that you need to keep on your radar. And of course, we've been highlighting the big buzzers from yesterday, be it in Escorts, Kubota, or for that matter, some of the other buoyant names that you've seen off late. And yesterday, surely it was the entire hotels pack. BHEL, of course, also has been the other one, right? They've secured the order of setting up that that massive plant, and BHEL has been a big mover all through this week and now also holding up by about almost 2% as we speak right now. There's Maruti Suzuki. JP Morgan is placing Maruti on a positive catalyst watch. There's Dish TV, wherein JC Flower, Yes Bank, ARC has reached a compromise with Subhash Chandra. So these are a couple of stocks which are, which are holding out in the positive, and they've got positive news flow attached to them. Negatively, though, there's Aster DM, wherein there's been a downgrade coming in to now hold from the earlier buy. There's Sula Vineyards as well, wherein we understand, or reports are indicating, that PE firms are likely to sell a 12.5% stake via a block worth about 540 odd crore rupees, and maybe that block has already happened, 3.6% lower now on Sula Vineyards. But news coming in from the Adani Group.
All right, now this is in regards to a report which the new research entity of Soros was supposed to release. The Adani Group has come out with a complete denial, and I'm going to read it off. We categorically reject these recycled allegations because frankly what has come out is pretty much recanning of the same thing which were raised by the Hindenburg report. News reports appear to be yet another concentrated effort or bid by Soros funded interest, appears to be a bid by Soros supported by a section of large media. Now, let's look at those stocks, and I don't think the stocks are going to see any large sell-off like they saw when the first time the report was released. Why? Because markets will not react to the same thing twice. B, financially, the situation at the Adani Group level is solid. C, they've managed to raise capital. B, the debt levels are manageable. And the fact that all the over-leverage concerns are now behind us in terms of where the positioning of the group was, I think from a market standpoint, this may just turn out to be a morning of volatility for some of the Adani Group of stocks, and then you could move on from there. Let's look at all the Adani Group of stocks one by one, please. Adani Enterprises, Adani Port, all the Adani stocks here. So Adani Ports down 1.8%, Adani Power down 3.5%. These are pre-open rates, and I expect that early morning you may see a little bit of volatility, but I don't expect any kind of a panic or a sell-off or any kind of a selling stampede or a similar kind of a reaction when first time this entire saga had hit us. So that's the positioning for you in terms of the market setup. The market setup clearly is indicating that we are in for a flat start. There's a denial which has come from Adani Group of stocks, and from a market standpoint, it may just turn out to be a weak morning and then nothing beyond that. Aisha?
Yeah. Okay, getting set then for the market open. Right now, though, you are seeing a bit of a negative start when it comes to the Adani Group names, but maybe some buoyancy will kick in eventually. Let's also take stock of what else has been in the highlight, and I want to definitely revisit, the big buzzers from yesterday. What with the move on an Escorts and a BHEL, as well as Indian Hotels. Those stocks will just come off for you next. Escorts absolutely flat as we speak right now. Indian Hotels seeing further a move even after that 6% off a ride that the stock had yesterday, another 1.5% higher as we speak right now. And BHEL, after that mammoth order win, almost a 2% move coming in on BHEL as we speak. A bunch of other names which are also on our radar this morning, and we've been highlighting as to how a JSW Steel, which has disclosed the contingent liabilities for the company at about 5,000 crore rupees, that's going to be negative sentiment. So, that is one stock which could be a little bit in the red today. But yeah, besides that, the index, Nikunj, continues status quo, but I think we have someone to spice it up today. Samir Arora in the house, and he should be joining us just any second now.
He's not in Singapore. He is in Bombay, and there you could see that's our ET Now office, our newsroom. Samir and at this saw Dinshaw also, I think. Okay,
yeah,
there you go.
Dinshaw is also with him.
Samir Arora, aa jao bhai studio, aa jao. Wait kar rahe hain sir.
Yeah, and you know, we were looking at some old clips, Nikunj, and I have to say that Sameer looks exactly the same. This was a few years ago when I visited Singapore and I interviewed him on campus. And yeah, he looks the same, but in the markets, I think they also look the same today.
Yeah, that's the part. You know, nothing has changed for markets in last 1 month. Incrementally, if you really think about it, the deep bulge actually seems to be there in some of the mid and the small cap stocks. So what do we have on the Nifty? Very flat start with no bias per se. The breadth has done phenomenally well, and the breadth is doing exceedingly well today in terms of the market open as well. The small and the mid cap indices are off to a great start. I want to mark a tiny group of stocks. Is there any reaction? The pre-open rates were indicating there would be a minor nick here and there, some volatility here and there, but I will not use the word panic. I think this is more like a knee-jerk reaction and hardly a reaction, 1% here or there. You don't use the word sell-off here. I think markets in a sense have now matured enough to understand the real positioning of a tiny group of stocks in terms of leverage, in terms of their debt profile, in terms of the ability to raise capital, the fact that promoters have sold, there is no liquidity crunch per se, which is what some of the concerns were, and I think all those concerns have been allayed. So markets are just not reacting to the new sort of reports or allegations which have been raised by a Soros-backed entity. But breadth, I think, is the talking point, and I think breadth is once again looking very, very charged up.
Yeah, the breadth is looking charged up. The Nifty not doing anything, so nothing changes really in our lives. In the last 1 week, Nifty has done nothing, but it's okay. We're not complaining. BHEL, that's really been the star all through this week, and they've bagged another order from NTPC for a thermal power project in the state of Chhattisgarh. So let's revisit that stock, 1.25% higher. Remember yesterday it was the hotel names which really bounced up. I mean, across the board, LTIMindtree, Chalet, Indian Hotels, massive move in the entire sector. And today too, most of these stocks are seeing some buoyancy kick in. I just want to revisit what Sula Vineyard is up to, because reports are indicating that there is likely to be a massive PE offload, a stake of about almost 12.5%. And I think that block deal has already happened, 3.5% lower on Sula as we speak. There's Maruti also. Was a winner yesterday. JP Morgan is now placing Maruti on a positive catalyst watch, so look out for that stock. And maybe Dish TV too, wherein JC Flower, Yes Bank, ARC has reached a compromise now with Subhash Chandra. We don't really track Dish TV that much, not high on liquidity, but 3.5% is where that stock is. And I think that block deal has happened on Sula. That stock is in highlight right now, down as we speak. Geo Financials, once again, multiple block deals and the stock locked in upper circuit. Let me quickly take it across to Naresh, find out what are the first trades that he's punching in. And I'm sure, Naresh, it's not a trade on the Nifty, because once again, it's a flat start.
So not on the Nifty, it's on Mahindra and Mahindra. The stock is close to a new 52-week high and an all-time high. It looks promising for the short term.